right. So funny thing is, I accidentally clicked on income tracker instead of bill tracker. But if you click on bill tracker, yes, you can enter in a purchase order through that way. Okay, so I that was my mistake. I clicked on income tracker. It's supposed to be bill tracker, right? We're dealing with our vendors, not our customers. So here you can enter it in through this way as well. So yes, it is a way that you can enter in a purchase order. Okay, so that was all 6 ways. Okay, so now that we've already entered in our purchase order, the next thing that we're going to take a look at is what happens when we receive our inventory items. Now, if you look at this icon right here where it says receive items or receive inventory, you're going to notice there's a little drop down arrow. And if you click on that, you got 2 options, one with a bill or one without a bill. Now, what's the difference between the two? Pretty straightforward, right? Oftentimes, when you make purchases of inventory, you can have 2 separate shipments. You can have 3 separate shipments as long as you keep the purchase order reference on hand. Because oftentimes is when a vendor, right, depending on their supply and demand, they may only be able to send you a certain amount of items, and they may, to fulfill your order, they may have to split the shipment. Maybe they're backed up. Other than that, yes, if they just don't have any available, then they're going to just ship you out as soon as they receive some kind of amount in. So if that's the idea here is we typically get what's called a packaging slip, right? And usually the bill doesn't come in until they complete their order. So with that being said, let's take a look at this example here where we're going to receive our inventory without a bill. Okay? So once you see that, right, you have the same exact options if you go to your the vendors menu. You can receive and enter a bill, or you could just receive the item. So in this case, the question is, do you want to receive the inventory items without a bill? Then you just click on receive items, okay? Of course, if you go to your vendor center as well, you have the same exact options. You can receive the items or receive items and enter bill. Same thing here. Receive items right here or receive items and enter bill. Same thing with the managed transaction. Okay? Except the managed transaction, there's a new terminology, right? You can either enter a bill or you can enter an in-item receipt, okay? Which is also, right? Let's take a look at what happens when we click on receiving the items without a bill. Okay, cancel. Okay. So let's go ahead and receive those items without a bill. Okay. Then we're going to get what's called an item receipt. So this is also known, like we mentioned before, a packaging slip. Now, most cases you will have a reference point. You'll have a package slip number. And it's very important that you keep track of that because if you look at it and you throw it away, right? You might not be receiving all of your items at once. Now, typically that could also be a possibility too where you actually receive the items, but you don't receive a bill until maybe you don't get billed until a month after. That's the same thing here, right? You can go ahead and receive the items. However, you can receive it against it as well. Now, in this case, I'm going to go ahead and say we did receive the items, okay? So I'm going to go ahead and type in a supply, and it's going to notify you that, hey, you have an open purchase order. Is this what you're looking for? Is this the items that you're going to be receiving? And I'm going to click yes. Once I click yes, right, that there's an associated purchase order, I'm going to go ahead and select it. Okay, so right here, it's purchase order number 2019-1. And I'm going to click OK. Now, what you're going to notice is that once I clicked on it, it pulled up my open purchase order. And it's telling me that, hey, you received this amount of items, right? And this is where we can change it if we'd like. So again, I believe the dates stay the same. Now the reference number, right, could be your so I'm going to write PO for purchase order. Okay. 2019-1, and I'm going to go ahead and indicate A since this is part one. This is a packaging slip, right? You could do this. You could. I would normally use the reference point to your purchase order, or you could you definitely want to make sure that you make sure of it or place it into the memo if you'd like, or you could put your packaging slip number there, and then in the memo you can write this is from purchase order number 2019-1. Whatever way that you want to memorize it, or make a connection to them, saying that you did receive the inventory items from this specific purchase order. But most cases, your reference number would typically be the packaging slip number. Okay, and in this case, the example says that we only got to receive half of our items. So here, I'm going to say I received 10 out of the 20, and I only received 20 out of the 40. All right, once everything looks good, right, and it says received items, bill to follow, right, and I'm going to go ahead and indicate that I received a portion of the items, or received half of the items. Okay. All right. Whatever note that you want to place in there, it doesn't really matter. Now, once I look at this and I validate that I only received half of my items, I received 10 of those metal picture frames and 20 of those wooden frames. And when I click save and close, then I'm going to get that beep of approval. Okay. Now there's two things you can take a look at. You could take a look at your purchase order, right? So if I go to my reports and I go ahead and take a look at my purchases and look at my open purchase orders, okay, I'm going to notice this. I have my A supply, but look, it's now cut in half. I used to owe $243. Now look, it's down to $121.50. Okay, and that's my open purchase orders because I received half of the items. Okay, same thing if you go to your vendor center and you go ahead and click on that vendor, right, and we open up our purchase order, right, you're going to notice that here's the full order right here, and on the side, okay, so this is your purchase order. So here, at least you can recognize that you're supposed to receive 20 of the items, right? And what do you notice here is you have the item receipt right here, which allows you to tell you that you received half of those items. Okay, and it also gives you when you take a look at your summary over here, it should tell you that you have this much amount. Okay, so here we received 10 of the metal frames and 20 of the wooden frames. So if I run my report to see my stock status, you're going to see that I at least claim half of those items. So let me go to do my inventory stock status. Okay, and notice this, my metal picture frames, right? I started with 20 of them. I have now 30. And here, my frames for the wooden ones, I at least have 20 available. Okay? So now that you're going to notice that, all right? And we received at least half the inventory, and it automatically updated our inventory without us having to do anything. All we did was we claimed that we received the items. Okay? So we got to take a look at our open purchase orders, right? We saw that the purchase orders was cut in half. Okay? So then now I'm going to go ahead and claim the rest of my items, right? So you're going to receive without a bill, okay? And once again, I'm going to go ahead and claim a supply, and it's going to open up this window once again saying you have an open purchase order. I click yes. I click on that very same exact one and watch this. When I click OK, boom. Now it pulls up all the information and it tells me that means I should be receiving the other half. So you see how QuickBooks, right? It keeps track of what your purchase order was. It kept track that I received half the items, and when I went to go ahead and receive the other half the items, it automatically knew that. It pulled the information without me having to modify it. All right, and now it's to the total of the 121.50. Okay, so once again, you're gonna recognize this is the other half of the item. So you can write other half of items, right? And then the date, I'm gonna say this was probably, on the 15th. Just saying that they shipped you the first half the first week, and then they shipped you the remaining the second week after. And in this case, the reference number once again could be 2019 dash, or I say PO. PO 2019-1, and then you can associate it with a letter B, saying this is part 1, this is part 2. And notice this, once again, we recognize that we had an open purchase order, and it automatically recognized that I'm receiving the other half. Okay? And now I'm going to go ahead and click Save and Close. Okay? So let's go ahead and take a look at my window again for my Ace Supply. Okay. Notice that we have 2 item receipts. Okay. 2 item receipts. Okay. And now we need to receive a bill. Okay. So what's going to happen is that I would recommend you to just utilize the one on the home page, because that one's going to be directly correlated to entering in a bill. If you enter in a bill using the enter a bill, unfortunately, depending on which software you have, if it's a 2018, it will not recognize that you have a purchase order or that you have pending item receipts. So the best way to do this is the only option which is on your home page, which is to enter bill against inventory. You don't have that option anywhere else. All you have is just an item receipt, okay? Or to enter in receiving the items without a bill, but there is nowhere in here that you can enter a bill against inventory. So this is going to be mandated if you have a packaging slip, okay? The only option is on the home page. And when you click on this, it's going to pop up a window. Who are you looking to enter a bill against inventory for? We type in Ace Supply, and you're going to notice what happens. You have the item receipts here. And I'm going to go ahead and select, okay, this, okay, and I'm going to go ahead and click OK. And what's going to happen is it takes the item receipt and it's going to convert it into a bill. And let's say I received these, or let's see what the date is. I think it's supposed to be the same date, but in this case, I'm just going to say I received the last set of items along with my bill on the 15th. Let's just say that, okay? And what's going to happen here is that now that I entered in the bill against inventory, okay, and I'm going to go ahead and validate that it was on the 15th, right? The reference number, you can change this because once again, your bill is going to have a bill number on it, okay? In this case, I don't know what it says in the book. Let's see what the book says. Let's see, purchase order. Okay, so when we enter in a bill against the inventory, we're going to use, okay, let's see. We're going to be using the bill number 4431. Okay, so bill number 4431. Okay, once again, let's see what the date is. Again, I'm just going to say it's on the 15th because that's when I received the second portion of the other half. So, yeah, once I do that, right, everything looks good. Again, the bill due date, right, this could be relative, right? Whatever date that you received the last items on is going to be typically when you receive the bill or whenever you actually receive the bill, right? You could receive the items, another packaging slip, and you won't be able to receive the bill until a month later. That's also possible as well. So once again, I'm going to go ahead and just erase that, and I'm going to say received bill for purchase order 2019-1. Okay, and I'm going to go ahead and click save and close. Okay, and then it says here you have made some changes, and I'm going to say yes. Okay, once I have that and I get that beep of approval once again, okay, then I'm going to go ahead and redo the same thing because this is what you have to do. Unfortunately, you cannot select as many item receipts as possible and create create one bill from it. That's the only downside there. So this is going to be 4431-1. Same date, the 14th. Again, this is going to say receive bill for purchase order 2019-1. And once again, everything looks good. And then we could go ahead and click save and close. And yes. So once again, once we notice that we have received those items that we converted into a bill. So once again, unfortunately, you can't add them all together and create one bill for it. Tried many ways. Unfortunately, that's one of the things that QuickBooks kind of lacks on is if you have two packaging slips, so you have to enter two separate bills. In this case, you're just going to have to make some kind of reference number to let you know that this is one bill. Okay, so unfortunately, that's just the downside about this is that you can't combine more than one item receipt. But notice this. What happened to my item receipt? They converted into a bill. Okay, so now your purchase order matches your bills, right? It's $243, right? If you add the two bills together. But like I said, that's one of the downsides is that when you enter in an item receipt, unfortunately, QuickBooks cannot stick two to two together. You have to create a separate bill for each item receipt that you convert. But that's essentially what you're doing. You're converting the item receipts into bills. Okay? And once again, you just make a bill payment on the day that it is due. Right? Any questions in regards to this? Hello? No? No questions? No. Okay, so that's receiving items without a bill. Okay. Now, for this example, let's go ahead and take a look at what happens when we click on receive items without with the bill. Okay, but in order to do that, let's go ahead and create a fake item real quick. So I'm going to go ahead and go to my purchase orders. And let's say I bought something from Ace Supply, right? Walnut Creek is going to be the location. And this time I purchased 3 of the cameras. Okay, so, no, so item, there's no such thing as item 3. Item is camera, camera SR32. and we purchased 3 of them. Okay, let's just say. All right. And my purchase order, right, automatically it's been collated, right? It's recognizing that this is purchase order number 2, so 2019-2. And the date I'm going to say is maybe I bought it the day after, okay, on the 8th. And I'm going to go ahead and click save and close. So now the question is, well, what happens if I go ahead and click on that drop down menu? Oops. Didn't even give a chance. So once I click on that drop down menu and I recognize that I'm receiving the item with the bill, boom, automatically it takes me straight to a bill. Okay? And you should definitely do that instead of going and entering a direct bill in there, because once again, it's not going to QuickBooks will not recognize it if you just enter in something randomly. Like if I enter in a bill and it's meant for my purchase order, it will not recognize it. You must click on receive items, and the other option is receive items and enter a bill, receive items with a bill. So you're going to have to remember that. If you're doing a purchase order, you have to use the receive items with the bill in order for you to enter in a bill automatically. It will not make the association. So what it does is it's taking the purchase order and it's creating a bill out of it. So once again, I type in a supply. It now notifies me that I have an open purchase order. And that's what I'm talking about, is you can't just enter in a bill the way that you want to and it will associate it. You have to unfortunately go through the flow of transaction. So I go ahead and click at that, and let's say I received it the same day, the 15th, and of course my bill number will be 4551. Okay. And see, so here we automatically set that we received the items. So I'm going to go ahead and say receive items from purchase order 2019-2. Right? And everything looks good. Save and close. So that's the difference between entering and when you do a purchase order and you're receiving the items, right? If you're receiving the items with the bill, it becomes a bill. If you're receiving it without a bill, it becomes an item receipt. And then the next line of transaction is that you're going to have to enter in the bill against inventory, okay? But of course, if you enter it in with the bill, it's automatically a bill already. You don't need to enter it against for anything, all right? Now, once again, there's only one transaction in order for you to convert from your item receipt into a bill, and you have to do it through the home page, right? You have to go through the flow of transaction. If it's already a bill, then all you have to do is just pay it, okay? So any questions in regards to receiving items with or without a bill? Once again, I can run a report on the stock status, right? There you go, inventory stock status. And I'm going to notice this. I have now 12 cameras, 24, what does that say? Cases, and then 40 of the metal frames and 40 of the wooden frames, right? Do you guys remember that? We purchased a total of 20 of the metal frames when we originally had 20, and then we purchased 40 of the wooden frames when we started out with 0. So here it is. My inventory is automatically updated based on, once again, me just receiving the items, okay? Any questions in regards to receiving items? Okay. All right. Okay. So once again, we talked about how every time we sell our items, right? QuickBooks, on the other hand, will calculate every time you sell an item, right? The cost of goods sold, it's going to be based on an average cost per item. So once again, if we talked about having shipping or freight or anything like that, that's where when you enter in the bill, you would tack on that extra item. So it could be an extra other charge, like we talked about in setting up items, right? You can get charged for shipping, and that's going to go towards your inventory item. Okay. So once again, we're going to talk about how to adjust the inventory for any reasons that you need to. Okay. Now we will talk. So for example, in accounting, we talk about lower cost of market. Okay, and that usually happens when you deal with inventory, right? We have to assume that when we purchase our inventory, right, it has a lifespan. Okay, you can't expect that you to purchase something a year ago to reflect the same value it does today. Okay, perfect example is electronics, especially electronics, right? Let's say I bought a 2018 laptop, right, and I plan to sell it, but no one bought it. Fast forward is 2021. Do you think I can sell my 2018 laptop for the same price? No. It loses value over time. And that's exactly what you have to do too. Is you're going to go up to the market, you're going to research it, and you're going to look up whatever it is, right? Like a similar to a Blue Kelly book, right? You're going to look at the price value it is now at market cost. And what happens is my 2018 laptop, I originally purchased it for, I don't know, $600, let's say. And now it's worth $400 now because the technology, right? It's improving. They stopped producing the 2018 laptop and started working on the newer later models. So with that, we need to adjust due to the market and due to, of course, supply and demand. We got to talk about that too, but also because it loses value over time. So with that concept and that idea, we need to go ahead and adjust our inventory based on either quantity, value, or we could do for both. So how do we do that? Once again, it tells you to go to your home page and you're going to see inventory activity. You're going to drop that menu and you're going to see that you can adjust the quantity / value on hand. That's one way to doing it. Okay. Second way you can be able to do that is to go through your vendor's menu. Okay. You're going to go to inventory activities and boom, you're going to have the adjusted quantity / value on hand. Okay. Now, usually before that you even do that, what you normally do is because when we're working on QuickBooks, right, the best thing to do before you even adjust your inventory is to quickly go ahead and go down to the basement or wherever you keep your inventory, right? And you're going to take a physical count. Usually that's definitely rule of thumb, or that's just the best thing. But if for value, of course, that's going to be something that you have to research. But for quantity, you definitely want to take a physical count before you do anything. And as you can see here, right, you could even print out a physical inventory count worksheet. Okay, it pretty much is just, an outline of all of your items, and you could just check mark what you have. Okay. But in this case, I'm looking into just going to adjust it. So there's only two ways to adjust it. Obviously, the third would be in the inventory center, but I don't have one in 2019 because just like I've mentioned, right? I'm able to see my inventory items at any given time by running a report. I can even create my items by using my items list. So in this case, right, 2019, they got rid of it because it's an extra center that doesn't seem to be as useful anymore when you could do everything that is in the inventory center by doing it on the regular home page or whatever regular transactions that are normal to having to deal with inventory. So once again, I'm going to go ahead and click on that adjust quantity / my value. So once I do this, right, you're going to see this is what the page looks like, right? And I have the option. I can choose to adjust my quantity. I can choose to adjust my total value, or I can do both. So most cases when you are looking at readjusting for the value, right? Maybe you took a physical count when you came back up, you're missing a couple items, and at the same time it dropped in value. Then yes, you can go ahead and adjust both of them at the same time instead of doing one at the same time. Okay, now for those who are using QuickBooks Pro Premier and Accountant, right, which is what we're going to be focusing primarily on, is that you have that option where if you utilize a different type of method, this is where I can adjust it at every given time. So then I know how much to cost it out, right? Now that's just a little more tedious because once again, if you're using the average cost, it does it automatically for you. But if you are a small business and you want to use FIFO or LIFO, you're going to have to adjust it every single time you make a sale, or at least at the end of the day. All right, so then your books will reflect as so. Okay. But once again, that's if you don't use the average costing and you use another different type of costing method, then that's where you would have to come here and adjust it all the time. Now, with that being said, we're going to go ahead and take a look at our very, very first item here, which is to adjust for the quantity. So here, I'm going to go ahead and make sure that I adjust the quantity. Usually these things happen at the end of the month. So this one's asking me to do it by April 30th. And what you're going to notice is that it's going to take it away from my open balance equity. That's not what I want. In this case, I want it to reflect as a new expense account called variance account. Okay, so basically what that does is when we go into accounting, right, you can choose to either create an expense account that tells you that you have a lower cost of market account, or something to determine that you're losing the loss in value of your items. So you could take a loss on inventory, you could take, it could be any of them. And in this case, they refer this as inventory variance. Okay, and it's going to give you this saying, oh, but this, don't you make sure that you know that this account is not an income or an expense account, and you're going to say okay, because it's to basically take a loss on something that you've already originally purchased it for. And again, reference number, you can use any number. So I'm going to do inventory -1. Okay. Customer job, not really. Class, not really, because you could sell it to any type. And I'm going to go ahead and enter in my metal frames. Okay. And in this case, it gives me the updated information saying that I have 42 items available. Okay? And in this case, I want to make sure that I indicate that I lost a quantity, right? In this case, I'm going to say that I don't have 42, I have only 38 items left. Okay? So then I can click. Okay, I click here and type in the difference, right? So I have 38 left, and what's going to happen is that it's going to tell me, okay, so that means you lost 4, and I'm going to go ahead and click Save and Close. right? Now that I have that inventory variance, let's take a look at my stock status. So if I run my report and go to my inventory stock status, okay, stock status, you're going to notice this. It's been updated. Let's see my picture frames. I no longer have 42 anymore. I have 36 now. I'm supposed to say 38 because I guess my purchase didn't, or my sale didn't go through for the 2 items, but it says that here I only have 36 left. Okay. So now that we had that, again, you're able to also adjust your value as well, right? So here I just toggle out my total value, and everything that you notice, right? If you've done it once, it will pretty much reflect here, right? Invoice number 2 or inventory number 2. But this time I'm going to go ahead and I'm going to make an adjustment to my wooden one. Let's say my wooden ones lost value in value, right? Let's say wood became more abundant, so they said that now every cost now has dropped down significantly. So here it says that my total value right now is at 200, but my new value is going to reflect at 180. So I lost $20 value in here. Okay, and so that's probably like 50 cents each. Okay, and I'm going to go ahead and click save and close. So then once again, if I do run my report, right, due to the market, it's going to reflect that, okay, so I have to do my inventory detail. Okay, it's going to tell me that it dropped significantly. Now, it's not worth, let me go ahead. Okay, not detail. I'm supposed to do summary. Inventory total valuation summary. So if I click on the summary, there you go. So look at this. Now, again, my 40 items now have dropped down to $4.50 instead of $5, right? It was $5 when we originally purchased it. Now it dropped 50 cents. So now it's reflecting at $4.50. So every time you sell an item, it's gonna be the average is $4.50. So therefore, my total value is at 180 instead of 200, which we originally had it before. Okay. So any questions in regards to adjusting the inventory based on the value or based on quantity? Okay. Again, I use this since I don't have enterprise, because that's for bigger, larger companies. Corporate status, I would say, would be more likely beneficial to use the enterprise version. So therefore, if I need to make any adjustments, whether I'm using FIFO or LIFO, I just go right into the inventory valuation or the inventory quantity, and I just adjust it that way. Okay. So once again, that's how you adjust quantity and your total value due to the market. Okay. Any questions? Okay, so I'm going to go ahead and skip forward here. So we already adjusted inventory. Okay, so now there's one more topic, or I guess a couple more topics that I do want to talk about when it comes to, so we have group items, and then we're going to talk about inventory assembly, and then last but not least, reports. So, so let's talk about how we can set group items, okay? So here, if you guys remember from way back when, in chapter 7, when we created our items, and one of the items that we got to take a look at was called a group item. Now, I'm going to go ahead and create a new item, of course, And we're going to go ahead and explore what a group item is. So what a group item does is basically it allows you to build bundle packages, okay? So once again, the whole purpose of you creating items or services is that you can sell special packages, right? If you want to do like a great deal, right? Oh, if you go ahead and purchase 3 hours, right, we'll throw in a free picture frame, right? There's lots of deals and a lot of group items that you can create that allows you to either have a bundle package, or maybe you set a specific package saying that I have a bundle package, right, that provides you a service and it comes with a picture frame and you only have to pay one flat rate. So with that, of course, it's going to be considered a group item, all right? And I'm going to tell you the difference between a group item and an assembly item in about after a couple minutes after we finish this group item. So a group item is when we want to bundle up existing services, inventory parts, non-inventory parts together in one bundle, okay? So in this case, we're going to call this, I think it's called retouching. Let's see what it says. We're going to create a bundle item called 5x7 retouching. Okay, so here we are. We're going to name this 5x7 retouching. Okay. Okay, retouching, you could put package, whatever you'd like, and you're going to go ahead and indicate retouching. Okay, I think it's like 1 hour retouching and 1 5x7 wooden picture frame. Okay, so that's what the bundle comes with. So here, we're going to go ahead and indicate the item. The item, once again, is retouching. I think it's 3 hours, not 1. Right, let's see. Enter in 1 in quantity, and then press tab for the column 4. Okay, let's take a look at the picture. It might be better. So in this case, yes, it's 3 hours of the retouching and then 1 wooden picture frame. So once again, it is 3 hours. I gotta fix that. So this is 3 hour retouching, and then you get 1 photo picture. So again, you need to type in your items, okay? Here, retouching, I have quantity of 3. And again, here for my 5x7 wooden frame, it comes with 1. Now notice this. It doesn't tell me a set price that I can make this bundle for. So in order for you to recognize it, right, I'll show you an example when we have to go bill our customer or invoice our customer, that here you can't set the price for it. It's literally going to take 2 items and smash them together and call it a group. All right? And that's exactly what we did, right? You have to create your separated items first before you can create a group item. So just like the sales tax group, right? You have to create the sales tax item first in order for you to do a sales tax group. Same thing here. We need to have those separately first before we can combine it. And I'm going to go ahead and click OK. Okay, so then let's notice this. If I were to invoice, right, create an invoice, I'm going to go ahead and pick on Mr. Bob Mason once again, just as an example. Okay, Bob Mason. And let's say he did order the 5x7. Okay, so 1 of the 5x7 retouching. So if I do that, it drops down my menu now saying that this is what the package item comes with. It comes with 3 hours of the retouching, and then it comes with 1 photo picture frame, right? And it gives me the exact amount of cost on there. Now, once again, you can, because it's a bundle package, right? You always want to make your bundle package more appealing by saying this isn't a combination of just the two, right? You want to make sure that they get the best bang for their buck. So in this case, I'm going to go ahead and say that this picture frame is going to cost $0. It's free. Okay? But, and it's going to tell me this, and I'm going to say do not display this message again, and I'm going to click OK. So what you're going to notice is that I'm only charging for just the photo service, right? And my price for the picture frame is free. And there you go. Therefore, my total for this bundle package is just $285 even. So you have to make the changes on the sales form, okay? You can't set a bundle price for the items, okay? You can only change it on the sales form. All right? Maybe the special deal is that it's 20% off or something like that. You can change it however you like as long as you are consistent and you know exactly how the bundle works. And in this case, I'm going to go ahead and I'm going to clear this and close it out since I'm not going to enter it in. Okay? So that's how you create a group item or a bundle package. Okay? All right, now I had to tell you, well, what's the difference between that and an inventory assembly? Okay, well, inventory assembly allows you to create your product. Okay, now again, the only one that can use this is Premier and Enterprise. They're the only two that can create inventory assemblies. If you have Pro or anything, if you just have Pro, right, you can't do inventory assemblies. So for many instances, right, if you're a bakery shop, right, you could say your inventory items are your eggs, your sugar, your flour, your milk, whatever it is, right, to create the item, right? And then you're going to create what's called an inventory assembly to take those measurements, we call them, right? You could do 2 eggs, you could do 1 cup of sugar or 1 pound of sugar, whatever it is, right? Half a pound of sugar, whatever it is. Whatever it is, you can basically take each inventory item that you've created, and what you're going to do is you're going to assemble it together to create your product. All right, and that's the use of inventory assembly. Now, once again, I believe they have a page on here on 253 on how to utilize the inventory assembly part or elaborate on it. I did get to take a look at it. It's not very extensive. So once again, as a retail type of company, you're more likely to purchase already pre-made items and just resell them. Okay, that's a most common one. But of course, we also have small businesses who create their own products by buying other products. So for example, a bakery, right? You need to keep track of all the eggs that you buy. You need to keep track of if it costs me 2 eggs to make 1 cake, then how many eggs do I need to buy to make 10 cakes, right? So with that being said, that's what inventory assembly is. So that's the difference between grouping them and assembling them. One is you're just piecing the items together, tacking them into a bundle group, and calling it a day. Where assembly is you're taking each item and you're taking portions of each item to create an overall new product. Okay? So that's the difference between group and inventory assembly. Once again, inventory assembly is something that you can only do if you have Premier and Enterprise, but for Pro, you cannot do it. And look how small this section is. They don't even give you an example of how to even create one. So once again, if it's this insignificant, therefore it's insignificant in your exam. Okay? However, just know the difference between the different types of items, right? This one is when you're trying to build a product. Okay. Any questions in regards to that section right there? Okay? No. All right, last but not least is going to be your reports that you can do. Now, as I've mentioned before, especially depending on what position you are, is going to determine what you need for the inventory section. So once again, if you're in charge of purchases of inventory, then your section is just going to be under purchases, which we got to take a look at some of them, right? We got to take a look at our open purchases by item, or open purchase orders by detail, by job, okay? Again, what we did was we got to look at just open purchases in general. Okay, you can even look at purchases made by vendors. So if you have a particular vendor, right? If I go ahead and click on all, you're gonna notice that I only have Ace Supply. Okay, and I charged already $1,500 for Ace Supply. Okay, and again, we purchased something from Wong & Son recently, right, for the camera lenses, and that's our total purchases by the vendor, right? We only have a couple vendors that we actually frequently use. So once again, each report is going to be different. Once again, we got to take a look at inventory, whether it's the value of inventory, right? We got to take a look at the summary, and we also got to take a look at the stock status, and that's pretty much it when it comes to inventory, right? We get to look at the quantity that we have on hand and look at the value of them on hand as well. Okay, so that's what's really cool about this report. All right, but once again, it's only pertinent to you if you are in the inventory management position or you're in charge of purchase orders, whatever it is, right? Then you're just going to tailor your reports based off of that. Okay, and that's it for chapter 8. Any questions in regards to anything that we learned in chapter 8? So it was a mixture of chapter 2 and chapter 4, right? And chapter 7. All right, we got to take a look at in chapter 7 how to create the items, right? In chapter 2, we got to take a look at how we invoice our customers using those items. And then we also got to take a look at entering in a bill, which is from a vendor, which had to do with chapter 4. Okay, so as you can see, everything from here on is just going to keep building and building upon each every single time, right? Any questions? All right, let's go ahead and dive right into the review questions, okay? So let's take a look at question number 1. It says here, if your vendor ships more than what you've ordered, okay, on a purchase order, okay, so basically it's an overshipment, okay, which of the following, okay, actions would be appropriate?
B.
Okay, Nathan says B. Okay.
Yeah,
B. Okay. So in the book, it says B is the correct answer. However, I want to also discuss about D. Now, of course, let's take a look at each answer. So so answer A says that you could refuse the extra shipment, okay, and then send it back. That is definitely appropriate. Oh, I see. It's not appropriate. So A is definitely appropriate, right? You should definitely return those items if you didn't order them and send it back, okay? B says that you could receive the extra shipment and using the inventory adjustment transaction, okay? Technically, that's illegal, right? You didn't pay for it. Why would you receive it and just claim it's yours? Okay, so definitely B is definitely one of the answers, okay? C says you could receive the extra shipment, inform the or into the inventory, and then keep it and then pay for it. That is rule of thumb. You should definitely pay for whatever extra shipment that you've received, right? You need to pay for it. And then D says that you could receive the extra shipment, okay, into inventory, and then send it back and then record a bill credit in QuickBooks. Now D says that you're going to receive the items, send it back, and then record a bill credit. So you're charging the vendor for sending you over shipment. You're going to recognize it and send it back and then record that you received the credit for it. That's where I say, no, that doesn't seem very right either. Because basically you're still frauding the vendor by saying, I'm claiming it, and then I'm going to attempt to return it, even though it's over shipment that they accidentally sent me, so I can get money back out of it. That's technically not the right way to do it. So I say that D is a possible answer, B or D, but the book says it's D. But B. Excuse me, it's B. All right. Number 2. When setting up a group item, okay, where do you enter in the sales price? C, okay? The group item does not include a sales price. That is true, okay? Where do you have to modify it? How do you change it? Set price window where?
On the price list?
You could do it that way, but you could also, when we sell the item, right, when we sell the package, you can adjust it.
Yes. Take off that price, like if you did it with the frame?
Yes. Okay, so you're able to do it. You can change it at time of the sale form, okay, whether it's an invoice or the sales itself, sales receipt. Okay. Question number 3 says to activate QuickBooks inventory. D, right? You need to select the edit menu, and then select preferences, then select company. Then you're gonna select inventory, items in inventory, and then select company, and then select that you do keep track of inventory. So D is the correct answer. All right, number 4. Okay, the inventory asset account. What does it do?
A.
Okay, we have someone that says A. Anybody else? D. Anybody else? D. Okay, so let's take a look. Okay, tracks open purchase orders of inventory items. Okay, is that what an inventory asset account does? Okay, when we create the asset account, does it keep track of your purchase orders? Okay. So purchase orders is going to be considered a non-posting type of transaction, right? It ceased to exist because a transaction has not occurred, right? All you're doing is just requesting for items. So in this case, it doesn't keep track of your purchase orders, unfortunately, because it doesn't link your asset account at all. It only links it, once again, a transaction has not occurred. So a purchase order has nothing to do with it, okay? It's just a way for us to order something, and when we receive the items is where the transaction actually occurs. So in this case, A is not correct, okay? B says decreases when inventory is purchased. No. When we purchase our inventory, right, we're not decreasing the amount of inventory that we have. We're essentially increasing it, which is letter D. Okay? Increases when inventory is sold. Obviously, if you're getting rid of your inventory, you wouldn't increase your inventory, right? Because you got rid of it, you sold it. So answer D is correct. It would increase when inventory is purchased. Okay. Last but not least, question number 5 says in QuickBooks Pro, Premier, and Accountant, inventory can do all of the following except. B. Use the LIFO or FIFO method of determining inventory cost. That is correct, right? Because only Enterprise has the capability to be able to calculate the different costs for inventory. Only Pro, Premier, and Accountant uses the average costing. So in this case, the question is asking what can it do except calculate LIFO, FIFO. So good job. All right. So
Well, excuse me, what was the answer for two?
2,
Uh-huh.
it's it's C.
See? Okay, I
Yeah.
had it wrong as well. Okay, thank you.
Mhm. Okay. All right. All right. So, okay.